Hey everyone, it's Cameron with themoneyventure.com. This is episode 5 of Invested, where I show you how to build a stock portfolio from scratch. I opened up an investment account on March 20th of 2020, and I invest just $50 per week into the stock market, and I show you which companies I'm investing in, how I pick each company, and their respective returns. We're also going to discuss how to determine which companies to add more money to within your portfolio. So let's get going. So here's a quick update on the portfolio. Again, we're adding $50 per week. On Mondays, I have an automatic transfer set up going into this account. Again, on the left-hand side, you can see these are the companies that we're invested in, and then it breaks them down into different columns. And today's total gain or loss, the entire gain or loss since the opening of the account and since the purchase of that company, as well as the total value in each of these companies with the respective totals here at the bottom. So just to give you a quick overview, we've got Axos Financial, Fiverr, Logitech, Roku, Stitch Fix, Spider, S&P 500 ETF, Spotify, Tesla, and Zillow. And this position right here is really just the money market account. When you put cash into Fidelity's account, it sits right here. It lists them in total of, in order of the lowest percentage gain to the highest percentage gain since the purchase of the stock. So as you can see, we're in the positive territory on every stock that we've picked, with Zillow being the highest, a total of 89% growth since we started investing in Zillow, and the lowest being Axos Financial, which is an online-only bank account, of about 8%. So every time we add to each position, it lowers the percentage value. So for example, Zillow, if I were to add another $50 or so to this position, it would lower this total percentage growth because it changes my overall cost basis per share. So this is saying the average cost basis is $35 per share, but as you can see, it's now trading at $66. So if I purchased, another $50, it would raise my average per share price, thus decreasing my total percentage gain or loss, which isn't a bad thing, but just, FYI. Last but not least, the total growth that we've had in this portfolio has been 55%. And again, that's just starting from March 20th of 2020 and is now July 27th of 2020. And that's a total gain of $668.15. So again, I don't expect things to continue being this good because, as time plays out, we'll have down markets, we'll have up markets, we'll have winning and losing positions, which will, hopefully this number will stay above the average stock market return, which is, around 10%. And I'm confident it will. In all my other accounts, I'm well above that. So anyway, next screen we'll give a quick comparison of what these numbers are compared to the last episode, episode 4, which was, I believe, about 3 or 4 weeks ago that we gave a quick update. So here's the comparison to the last episode. Looks like the last episode was on June 17th, and today is July 27th. So again, just giving a quick breakdown, this orange box right here shows you the total value of each company in this first column. And then this is the money that we added between June 17th and today. And then this is the total current value of each position as of today. And so this column really represents the difference in the amount of money we've added plus any growth or loss in each of the companies. And this is an approximate value. We've got about $1 and some change in cash. So that number will vary slightly than the number you saw on the Fidelity screen that I showed previously. So, and then this green box here, again, is the total gain of each company stated in a dollar amount. So as of June 17th, these were the total gains for each of the respective companies. And then this is the total gain as of today. And this third column shows the difference. So from June 17th until July 27th today, this is what the company has done in value to our portfolio. So in white here, there's been a couple of them that we've lost some value, which again is okay and expected. The overall growth is still positive. And so anyway, so between June 17th, and today we've made in growth $317. So not too bad. And keep in mind that that's just growth. That's not including any of the money that we added here between the time. This column calculates the total growth alone. So just for having money invested, we've gained $317 just by having it sitting in the stock market in these companies. And then finally, this blue box is the total gain or loss stated in a percentage, not a dollar amount. So as of June 17th, these were the total gains of each respective company with the average total gain. And then as of today, these are the total gains. So as you can see, some of them have lost money between the last episode and this time with, actually I haven't updated that number yet. That number is actually 55.73 according to the last page that we talked about from the Fidelity page. So anyway, and so the total gain on the entire portfolio thus far since March 20th of 2020 has been 55% total. So anyway, and then this is the difference between last time and this time. Our portfolio has grown about 16%. A couple companies that have lost since our last recording, again expected, but so as you can see, when you source out good companies, you look for companies with positive financials, with strong products, good leadership, good reviews of the CEO, things like that. All the things above that we've discussed in other videos. You can see that the overall growth is way above the average, and again, I expect that number to probably average out over the years. And again, to compare it to the S&P 500. This is an ETF that tracks the S&P 500 right here. And I added money to this position on the first day that I opened the account, and I haven't added any money since. And so as you can see, the total growth of the S&P 500 of this ETF, if we were to put all of our money just in this ETF, we would have a total growth of 35%. Whereas when we pick good companies, we've outdone that by just about 20%. So anyway, any questions, comments, be sure to put them in the comments below this video. Next, we're going to cover how do I determine which companies to add more money to. We've got a list of a few companies here, and how do we determine which ones to add more money to each week and whether we should or shouldn't add any money at all. So how do I choose which stocks to add positions to? I usually choose one of 5 methods, and I'll just go over these really briefly. The first is to simply pick the company you're most excited about. This might vary from week to week, but we've already done our research on the company. We know it's a good company. We keep tabs on how their finances are doing, and simply it comes down to if we're really excited about that company, then we can add positions to it. The second option is choosing a company with a good pricing opportunity. A lot of times, for example, during like a quarterly earnings call, if the market seems to react in a negative way to the earnings call, the price oftentimes drops quite a bit. And then the question comes to, has anything changed about our opinion in this company? If not, then we take advantage of the pricing opportunity and buy while the price is dipped because it's bound to go back up. This applies to other economic events as well that might cause the price to drop, but we still have plenty of reason to believe the company is a positive and a strong company. The third option is just following the rule of 3. Simply pick 3 companies within your portfolio that you like the best and split it up among those 3. The fourth option is investing in lots. This kind of depends on each person, but usually a lot, you pick a number, whether it be $50, $100, $500, or $1,000, and just beef up each of your positions till they each the next total lot amount. So if one of our positions is at $500 and we consider a lot to be $100, then we add to that position until it reaches $600. If it's at $570, then we add to that so it reaches $600. So just investing in lots, just adding to each of them so they each have a round number of lots. And last but not least, if you're not sure, then there's nothing wrong with keeping your money in cash and waiting for another opportunity to arise. This has been the 5th episode of Invested, where I show you how to invest in the stock market from scratch. If you want to know more information about how to invest in stocks, take a look at our course called You Don't Have to Be an Expert to Invest in Stocks. I'll include a link to it in the notes below. You can also find the course by going to moneyventure.com and selecting the link that says courses.